In today's video on sniper entries, I'm going to be bringing on my boy GD Investments, and we're going to be discussing our two different strategies on how we snipe entries when day trading. As always, if you guys do find value in this video and you do want to see more videos of me and GD, make sure to like the video, comment down below. And if this video hits, let's say 300 likes, me and GD will release a video on our new day trading strategy that we are currently working on. But yeah, let's hop into it. What's up, Mr. GD? How you doing?
Good, man. Happy to be here.
Good. So, like I said in the intro, we're going to be talking about sniper entries. The only thing is with me and GD is we both have different strategies to identify where we're going to buy into our position and to sniper entries. So, I wanted to make this video, show you guys both of our strategies. We're also coming up with a different day trading strategy where we piece together both of our current strategies that we're using. So if you guys do want to see that, make sure to run up the likes, comment down below if you guys do want to see that. But yeah, other than that, let's just hop right into it. I'm going to go over my strategy first, and then you're going to show an example of your strategy, and then we'll just go from there. So yeah, the strategy we're going to be talking about for the way that I find sniper entries, it's going to be using Fibonacci retracements. So we're going to look at a trade that we actually took in Team Bull today. So if we pull up this chart right here of QQQ, everything about it was screaming bearish this morning. We saw a huge sell-off going into the end of last week. Plus on top of that, we had this little 4-hour bear flag right here. We had a 1-hour squeeze. We have higher time frame squeezes, all saying that we were going to fire down. So ideally on the day, I was very bearish on QQQ as well as SPY. So when I was looking at this chart on QQQ, looking at like higher time frame fibs, the only possible bounce that I had was if we take this yearly low at 254.26 up to the high right here. And you can see that that's pretty much where we're bouncing right now. So that was the only area I was watching for a possible bounce. Plus we had this daily gap right here that we were breaking below. I think right as the market opened, we started breaking below it. So piecing that together, bear flag, squeezes, gap to fill, no bounce till here, sets up a high probability short position. So now going into the market open, I didn't really have any reject levels either. So no rejects as of yet before the market. Let me move this. I'll put myself down here. Beautiful. So no reject levels. And as soon as the market opens, it just flushes straight down. Now, I just put this up on my Instagram story. Like, what would you do if you saw a price action like this? And a lot of people were like, oh, well, I would buy puts. Why would you not buy puts here? Because the move was already made. You would be chasing it at this point. And this is why being able to identify those sniper entries is going to be super important, because we don't want to buy all the way down here. We want to buy on pullbacks, get really good entries, and a very low risk to reward. Or yeah, low risk, high reward. So the way that I ended up getting this sniper entry today was simply just breaking it down to a 1-minute time frame. Now remember, when we're using fibs, we want to be able to identify high and low points, well-defined high and low, or either a low to high. So as QQQ sold off, again, I'm not buying puts on this move right here. I'm looking for that pullback. So as QQQ started pulling back like this candle right here, I ended up taking the high a day at, what is that, 273.96, down to the low a day at like 272.15. And I was saying in Team Bull, I was saying, okay, if QQQ can pump up to 273.27, I'm very interested in puts because the trend is clearly down. Again, going back to the bear flag, the squeezes, we're looking for pullbacks so we can add puts and take advantage of the next leg down. So looking at QQQ, started trading up towards this level right here, and it immediately came right up to that 273.27 and just smacked it and ended up trading down. Now with these fibs, I'm not simply just buying just because it came up to this level. I was watching the level 2 when we came up and we smacked it pretty hard and ended up selling off. And as I saw the confirmation of the sell-off on the 1 minute plus with the level 2, that's when we decided to get short in Team Bull. And as you can see, ended up dropping all the way down to, let's see, 270.86 from this entry of 273.27. Now, at the same time, stop losses are very important. So we were able to snipe our entry right here. And I said, okay, if we were to trade up towards like 273.5, that would invalidate this trade right here. Because remember that 61.8, it's very, very important. If we start breaking above in a reject scenario or below on a bounce scenario, then we're more than likely going to switch trends. So if we started trading up towards that 273.5, trend would have changed. We more than likely would have pumped towards high day, maybe even higher. So this was my invalidation point. At this point, we were willing to risk, let's just say like 40 cents of room to the upside. So a 40-cent stop loss. And let's see, let's go based off of an entry at 273.10, 40 cents stop loss. This thing dropped all the way down to 270.86. So what is that? I'm terrible at math. $2.20, 40, 80, 120, 160. Like a 6-to-1 risk to reward, pretty much. Meaning we're willing to lose $1 to make 6. And that was pretty much the entire trade. We trimmed on the way down, moved our stop losses, and eventually we were knocked out in profits on this move up right here. So beautiful trade. That's how I find sniper entries, just using the fibs and looking at that 61.8. Now, Mr. GD, you're going to show your way of identifying sniper entries, and then, yeah, we'll continue to go from there.
Okay, so I took one trade today, and basically I'm going to show you how I found it and basically how I found my sniper entry. So I was using simple supply and demand. As you can see, we come down to this level of demand here on Microsoft at 240. In previous time, we had this significant move, a big move up to the upside. So that means there were buyers down at this level. Now I drew this demand zone like this because I waited for the move to actually happen, so we can see actually buyers step in, push the price up. Instead of marking this zone all the way down to this 238, I just said on my Instagram that I was watching from 238 to 240 bounce. So it was a free call out, basically a free alert, but just basically my watch list for the week. I also gave zones on Apple and AMD, but this was the one that actually hit today. So as you can see, even on my Instagram as well, I was saying that I was expecting more of a sell-off, which we've seen today. So going to the 5-minute, which is where I trade these zones off of, we can see this Microsoft drop down aggressively and then end up touching this zone. And what I did was, it was a quick move into this zone. I seen it wick all the way down, and then I didn't take my position until I seen this candle body actually close above it, which typically I like to take a starter position right when the candle enters the zone. However, this is a slightly bigger zone, so I wanted to make sure we were bouncing before I entered. So I seen this bounce. I entered my full position just for a scalp, and we've seen a nice 3-5-minute candles up, and I took most of my position off at this 242, and then let a few contracts ride, and then I took it off at the VWAP. So that was basically my only trade for the day so far. And how I enter this is where typically I like to enter this when this enters the zone, and then basically I'll enter my full position once we see candle confirmation out of the zone. That would be my ideal scenario, but I didn't really catch it until I seen this wick all the way down, or already the candle close already up. So I ended up taking it with my full position just at the scalp. Now, if this were to go wrong right away, what I would do was, if I took my starter position and this continued to go wrong, I'd add in the zone, and then with a 5-minute close out of this zone, I'd stop out. Or in this scenario, if I were to take this position already wicked up, and this ended up, this candle closed, and then I took my position, and then it ended up failing, I just close out at the at this level. So that's where I would have my stop loss right below this level. Does that make sense to you, Brandon?
Yeah, it does. So when a stock is coming down into demand, you're essentially just kind of like slowly adding to the position. Is that what you're doing?
Yeah, so, when you're playing demand, it all depends on what time frame you found it off of, right? So this time frame was slightly bigger since it was the hourly. So, you want to play it, you want to leave yourself for a little bit more room, because if you try to play it as a scalp, the zone could end up being, the right area could have been 240 or maybe even anywhere in the zone.
Mm-hmm.
So you want to give yourself that leeway so you're not, freaking out or you're emotional about your position. It really all depends on how you like to trade. Personally, I like to put in 25% of my initial position, so I just don't miss the move, right? Like right when we enter here, I would like to put in 25%, and then on an ideal scenario, 25%, and then once we see this candle close above, buyers step in, this is where I would like to enter my full position. Now, I caught it really late. I caught it when this candle already closed above. So I took my full position there, knowing my risk was at the low of the day. So either way, it still worked out the same way. You know what I mean?
Yeah. Beautiful trade.
Thank you.
So, yeah, supply and demand, to be honest, bro, I need to figure out how to do it because it still makes no sense to me. But looks like
So, supply and demand is a little difficult, and the reason why is because when you find it on different time frames, you can trade it. You should trade it really a different way every single time. Like if I'm finding supply and demand on the 15-minute time frame, chances are that I should be trading it as a scalp rather than a larger move. Like if I found it on the hourly or the 4 hour, you know what I mean? So you have to be careful, but at the same time, even those 15-minute demand and supply zones can produce a big move. So you just have to play it, according to your risk tolerance. So this trade right here was something where I seen this candle close and I played my full position because I knew my risk was only at the low of day. You know what I mean?
yeah.
So I was probably risking anything there. Now as far as say if this candle ended up closing down, then I'm out of this position. But I mean, this move could have moved all the way up today, and it could have been a super great day. You know what I mean? So, yeah.
Yeah, I mean, still, even with that position, it looks like you got in around 241, and it went all the way up to 242.5.
Yeah,
75.
basically, yeah. So my entry was around 240.9 around there, and then my last exit was around 242. So, pretty great trade.
Nice. And then I'm assuming you just move your stop loss up in this scenario, or how do you?
Yeah. Well, so I actually did something that I'm going to be honest. So today I actually took this trade. I made good profits on the way up. We had this dip down, but this Microsoft was a stronger name. Like the market was falling, and we were bull flagging on Microsoft. So I felt like if we could see a push up on SPY, that I could get see more continuation. So what I decided to do was add a little more down this dip, and it worked out in the start. And then it ended up not working out, so I had to close down here. So I made a little bit of money on this trade, not much, but if I had this next leg up, it really would have made me a lot of money. So that was the risk I was willing to take, and it failed, and it is what it is.
Nice. Yeah, and I think the nice thing about fibs and supply and demand is, again, the main thing, what I used to do when I was a beginner trader, was I would chase trades. Like that Microsoft, that first 5-minute candle, I would chase puts right there. Now in this scenario, yeah, it would have worked out because we continue to dip, but we know as it continues to drop more and more, the odds aren't in your favor. That's why I think fibs and supply and demand are very important, because it can help you identify those low risk, high reward setups, because a stock's not going to go down forever. Just like in this Microsoft example, it sold off substantially, but we can still take advantage of a nice bounce because, again, it's not going down forever. We're going to get some kind of pullback and then maybe the next leg down. So,
right. And
yeah,
the thing about supply and demand too is I already have my my zones mapped out at any day. So last night I looked at my computer for about 30 minutes, found the demand zones that I was willing to play on AMD, Microsoft, and Apple, and I said, here's my scenario if the market ends up selling off, which I really felt like it did. I was going to. I even said it on my Instagram, and it ended up happening. We sold off, and then I already had my demand zones mapped out, and so this one was the only one that actually hit my demand zone. Apple's in my demand zone right now. Now it's actually about to exit that. It's about to push up from that demand zone. But yeah, so this was the one that entered, and I was able to catch that for a decent move. But I ended up screwing myself a little bit by trying to average more. Although if I would have took my profits at this 242.9, I would have made great money. I was just really looking for that continuation because I felt like if the market did bounce here, this was one of the stronger names at the moment. So we could have definitely seen another push up, but maybe that was just my emotions. Maybe that was maybe I was trading off of just thinking, which is I don't recommend. However, it didn't work. So yeah. Do you have any comment on that?
No, I think you did good.
Oh, thanks. I thought you might have told me what I did wrong.
I mean, if any,
We
Personally,
are on the DMAs on the 5 minute and 15 minute, which was like, okay, I know, there's a high probability we reject off of those, but
mm,
I mean, yeah, I just felt like it was one of the stronger names where if we've seen a bounce in the market. I really thought that it was going to take off, so that was my thinking.
I feel like we made a 50% rejection right there. Can you pull up your fibs real quick?
Probably, um,
Do you know how to do it?
kind of.
The percentage, yeah. And then take the high a day.
Oh wait, did I do this wrong?
Yeah, take the high wick, the highest point
Of which one? I
of
don't think
that
it's strategy.
the opening candle.
This one right here.
Yeah, so take the very top of that, right on the wick, and then take it down to the one that went into your supply zone right there.
Yeah, it's 50. It's
Yeah.
around 50. It's in between 50 and 60.
Yeah, so it kept rejecting that 50.
Actually, held 50. Actually, perfect.
Yeah. So
Is that what you play off, the 50 or the 60?
mainly the 61.8, but it also depends on confluence. So like in this scenario, we have the 50% at that area, and then what is that, the 9 EMA or 2120?
Yeah, this is the 20.
Yeah. So I would look at this and be like, okay, we got the 50 here, plus we had the 20 EMA. We're rejecting it 1, 2, 3, 4, 5, almost 6 candles in a row on, what is that, a 5 minute? Yeah, so like 25, 30 minutes in a row. And then I would look for puts from there. But
Right. So one thing I'm seeing now on Microsoft too is this is my end of my zone at this 240 level, and we've just seen an aggressive bounce at this 239. I wouldn't be surprised if we can bounce up here, but typically what the thing is about supply and demand as well is that when these zones actually break, they can turn into if this were to keep selling off, this can turn into a good supply zone. So when the price re-enters, we can expect it to drop back down. So zones can flip, depending on what you're looking at. But yeah, so this isn't invalid until a candle breaks out of it and holds. So
gotcha. And then just one last question about supply, or actually two. When you're using supply and demand, what time frame do you watch for the entry of the position?
So I always watch the 5 minute, but I always keep the 15 minute chart up as well because I want to see the bigger picture, especially when I enter a trade and I know it's a higher set. Let's say if I'm playing an hourly zone or a 4 hour zone, whatever it is, like a bigger zone. I'm going to be watching the 15 minute because typically when you're watching the 5 minute or any small time frame chart, you can get shaken out of a trade just by watching the candles form. You know what I mean?
Mm,
So at least for me, I think it's worked out to the point where if I watch the 15 minute, then I have more patience. I have, I give myself more time for the moves to actually develop and hit my price targets and potentially make the most profit. So that's what I like to look at.
gotcha. And then like in this scenario, you can see Microsoft literally hit the bottom of your supply zone and then pump. Do you, like, say earlier in the morning, we ended up coming down into that supply and we just flushed through the top portion, the candle that you got in. Say we just flushed down to the bottom of the supply. Is that a higher probability for you that we're going to bounce? Or if you see something like that, are you like, okay, never mind?
Right. So one, I would probably check out the 15 minute and give myself give myself a little bit of analysis there.
Okay.
Like for in this sake, this was a decent move on the 15 minute, but it's not really what I wanted off of a higher time frame demand. Now this entry right here from Microsoft is kind of where you would want to enter right here. We've seen this, if this candle can close as a doji, basically our stop loss would be under this candle low, and this would be a high probability entry with a higher time frame. So if we entered this trade, I would expect a pretty big move out of this trade if this happened. If we entered here. Now, regardless, we would only risk down to this low, which is 239, if the candle closes here as a doji. So that would be a good trade in my opinion.
Gotcha.
Because your risk to reward, I think this potential move from a 1 hour demand could produce a big return rather than our stop was only 239.5.
Yeah, that's all the questions I had about supply and demand. Again, me and you, we're gonna work on we're gonna work on this day trading strategy. I definitely feel like there's something that we could produce from it.
Now on the 5 minute, we could see that it closed as a doji, which is a good, or it has a hammer candle, right?
Yeah.
Whatever, either one. We've seen buyers step up down at this level. Now, one thing we can do is, even if we're on the edge, even if we don't know how to trade this, right? Even if we're just beginning how to trade supply and demand, we can say, all right, I'll take literally 25% of my normal position size and I'll buy here. I'll be a buyer, just so you don't miss the move, right? Say if this ends up, pushing up, we see buyers step up, then you can add when you're already in profit, or if you just want to take a small trade and just learn from it. But say if you took 25% here and this candle ends up coming down, closes down below, I mean, then you lost, a very, very small portion of your money. So it's willing.
Yeah.
In my mind, I would rather take that little bit of risk and take the trade so I can at least learn from my experiences and learn why that didn't work and how I can, make my strategy better.
Nice, good stuff. Is there anything else you would like to say before we wrap up the video?
I know there's going to be people that say, where do you exit these trades? Like, if this ends up working, where do I exit? So I would use previous, support and resistance. So first of all, I would probably put a marker right here at this 242. As we can see, it was the area of confluence. Today, we touched it multiple times. And then, I have this 180-day SMA line. I always use that as a period of where the, price action could potentially flip. It's definitely acts as a good support and resistance. At least that's what I've seen when I've used it. So, ultimately that would be one of the places where I put a marker like, hey, this is probably my max target. Maybe if we got out there, I would maybe look for a high day, but that's a huge move. So, overall, I would literally just say whatever you're happy with. I would definitely come out and say right here at this point, I would probably take off some as well because this was a point of support and resistance. So around this 241 and then around this 242.8, and then potentially maybe a few runners for all the way up here. That would be potentially what I would look for. Now, as you can see, there's candles forming in this demand where we're pushing up, and potentially we can exit this zone, and this could be a very valid demand zone that we see.
Good stuff. So yeah, where I know you uploaded a video on how to draw on supply and demand, so if you want to plug that real quick, you can feel free to do so.
What do you mean, plug?
Go to my YouTube channel, GD Investments. I uploaded a video on supply and demand.
Okay, I got you. All right, ready?
Yeah. I'm leaving all that in the video too, FYI.
All right. So if you guys want to learn more about supply and demand, you guys can come check me out at GD Investments. I'm just restarting my YouTube career, so I'll be posting a lot more about supply and demand, trading, and honestly, whatever I want to post, I'll just post it on there. So if you guys are willing to watch, make sure to hit that subscribe button. And me and Brandon trade together every single day. So in Team Pool. So if you guys are interested, make sure to go subscribe and hit the like button.
Yeah, sure. Cool. Anyways, that's going to wrap up the video. As always, if you guys do want more videos from me and GD, make sure to like the video, comment down below, head on over to his channel. Make sure you guys are subscribed over there as well. And yeah, I guess me and GD will be doing more videos in the future. So, peace.